It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, September 28th, 2015. Welcome back. Hope you guys had a great weekend. Squeezing out the last few drops of this month of September. We are almost into that incredible month of October, right? Baseball playoffs start. One of the best times of the year, right, if you're a sports fan. We've got Halloween coming up, right? Very exciting time of the year coming up. We got a few more days left in this month of September. We're going to have non-farm payrolls later on this week. This week is so jam-packed with major news. We're definitely going to see some fireworks this week, and I have a definite plan for you guys as we go into the last week of this 9th month of the year, the month of September. Crude oil is bearish, coming off the lows of a channel, which means the best opportunities are going to be coming up after a correction higher. We're looking for a correction higher on crude. On the E-mini S&P, getting crushed today. E-mini S&P is bearish, and I'm looking for a measured move correction on the S&P up off these lows for tomorrow. I got a pretty good plan and a really good chart for you guys on the S&P for tomorrow. How about gold? The yellow metal is range bound, but we get a bearish tone on gold this evening, so we're looking for sellers to try and fail at the lows. We're going to be keeping a close eye on those sellers at those lows of the range on gold because we may be able to get this thing buying right back up to the highs. How about the euro? The euro futures, the 6E is bullish this evening as it's rotating back up to the highs of last week's range. But, before you go buying the euro right now, the short-term measured move tells us to look for a pullback, small correction, before we're going to get the best buying opportunities going into Tuesday's session. So we got a plan for crude, S&P, gold, and the euro. Before we get into today's charts, though, you know me, I want to remind you to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, there's a link right in the description of this video, and that'll take you over here to our trading blog. A few reasons why you might just be interested in coming over here to Sideways Markets. First of all, if you're not a member of School of Trade, if you're not an advanced member, and you'd like to get a test drive of our live trade room as a guest, you can grab a free pass to attend our live trade room, upper left-hand corner. In the lower left-hand corner, right above my ugly mug, we have a registration form for our nightly newsletter mailing list. Now you never have to worry about missing another newsletter ever again. Give me your name and your email address, then make sure you check your inbox. I'm going to send you a verification email. That way I can keep sending you emails every evening around 8 p.m. once that newsletter goes live. Right below the video tonight, you can download all the charts, right? What a great little bonus that is. Grab all the charts you see in tonight's video. Follow that link below the video. And on the right-hand side, don't forget you can join our free trial membership. The trial membership is not the same as the free pass. You're going to learn all about how we trade as part of our free trial. You can learn more about what it means to be a member. You can read real member reviews. And, of course, don't forget, we've always got someone standing by 24/7, 365 to give you guys a hand. Now that you know the housekeeping issues and now you know where to get all the good stuff here, let's jump right into it. Like I said before, we got a busy week in front of us here this week. We got non-farms later on this week, and we got a bunch of news that is probably going to be shaping the environment as we go into October's FOMC announcement right towards the end of the year. So we know that we're still lingering about that rate announcement as we go into the final FOMC meeting of the year later on in the month of October. So we shall see how this news plays out. But we're definitely expecting some fireworks. Let's jump right in. You know me, I'm trading the chart, and right now we're starting with that crude oil, the CL. We are on the 11:15 contract for crude, and of course crude oil is range bound and bearish this evening, which means we want to follow the sellers and look for opportunities to sell at the highs of the range and the highs of the channel. But really what I want a measured move correction up off these lows. I love to see, well, there's really two big things here that I want you to pay attention to right now on crude oil. One is going to be the bear channel. And many of you are probably already saying what I'm going to say next, rotation, right? So we rotate from the high, down to the low, back to the high, back down to that low. Now that's a measured move. So we should see buyers coming in, sellers taking profit, and we're going to look to rotate back higher before we get the next opportunity to sell. So we know we want to be a seller in this bear channel. Where do I want to sell at? I want to sell up around these highs. Now, the chances of getting a big dramatic move off of those highs are actually somewhat limited. What is very likely is we get a correction back to the range high. That's the second thing I want you to be looking at here. My range high here, my range levels are going from 45.39 down to 44.58, right? That'll be the beginning of the week range here right now. You can see they undershot the high of that range already once this week, and that definitely, well, it was what created that bear channel, but it's also a very bearish sign. Now, that undershoot led to an overshoot of the range, and again, that measured move down really gives a lot of buyers reason to buy, sellers a reason to take profit, and we do expect to see rotation. Now, what we do expect is to see rotation back up towards the highs of this range. Now, we don't know enough yet, but the two main components are going to be rotation back to the high of the channel before we look for another opportunity to sell, and then, of course, rotation back up to that range high. If I had to guess right now, I would guess that the extreme bearishness that it felt like today, we're probably going to get a little bit of profit taking here down at these lows, and we're either going to be getting a selling opportunity at the high of the range or the high of that channel. If I had to guess right now, my money is on being able to sell the high of that range tomorrow. And what I'm going to look for is I'm going to look for a measured move correction. And you can see I've got an area of interest up around these highs, right? This 45.36, 45.24, and of course the high of the range is that 45.39. So ultimately right now you may be able to get a little scalping opportunity to the downside here, but you'll notice though we've got the low of this range is kind of staring us right in the face here. So what is likely to see happen is we're likely to see in the overnight session, before we come in tomorrow morning at about 7:30, 8 o'clock when the U.S. session starts, is we're likely to see this price has definitely tried to go off that high. Just be careful trying to sell too far off that high because you don't want to sell into that 44.58 area. What we're likely to get, though, is to get the chance to buy off that low, right? Very aggressive, counter trend, and then after we rotate back to the high, that's where you're going to get all of those patient sellers waiting for us tomorrow. As you can see, I don't have enough information to really know how far this measured move will go, but I know one thing's for sure, though. We're definitely bearish. And I definitely know the best selling opportunity is not going to come down at these lows. After a day where it was nothing but bearish, I mean, we didn't have any real. There was a few moments there between about 9 and 10 a.m. this morning where we did look a little bit peppy right from the bulls, but again, it quickly failed back down. So the bears are definitely in charge. Look for that measured move correction. And then buyers try once, buyers try twice. See ya, suckers. We're going right back down right after buyer failure. Look for the measured move correction. Be careful selling the high of this channel if we don't get them. I mean, if we're lucky, we're going to get a real quick measured move correction, and you'll get a scalp off that high. But it's probably only going to be a scalp. It's probably going to end up being a larger measured move correction, right, to get us at least for the best opportunities here to be a long-term seller as this week develops. Guys, I'm opening up my trade room tomorrow morning at 8 a.m. Come out and join me, and we'll take a look at that market together. Now, what are we going to do with this bear they call the S&P 500? I mean, literally, this is not S&P-ish. This is the last few months we have not seen. Well, as I keep reminding us, this is not your grandfather's S&P anymore, right? This is not that, chunk, range bound, built to stop you out. It's a fun S&P right now. And today this thing just took off and never looked back. Couple things we see right now in the S&P. Definitely bearish right now, right? Can we all agree on that? I don't think, are there any buyers in here? Any buyers in here, right? I don't see any right now. There are going to be some bargain hunters, But we're going to look for that correction and then that sell back down. What you're going to hear about the S&P is very similar to what we talk about the crude, but for a little bit different reason. Now, what I'm seeing in the S&P is I'm seeing a big long-term channel, right? That's really what I'm seeing. I did go out and find from these two major swings, giving us some areas of support below us, but let's be honest. The main focus right now, when you see a trending environment like this, and I talked about this today on Crude Oil in the trade room, there are two things that you want to be thinking about: measured moves and channel rotation. Those are the two most important things you want to be thinking about when you see a trending environment. Measured moves going down, A, B, C, D, right? This tells you where to stop selling. And then measured move going up, right? That's going to tell you where to start selling again, right? Looking for that correction. Did I see some light bulbs going off there? Very simple way to think of it, right? Another thing I want you to think about. The first thing is measured moves. The second thing is going to be channel rotation, right? Rotation. Rotation happens because of price exploration. And so we rotate. What we're expecting to see is highs to lows, lows to highs, highs to lows, lows to highs, right? And as we're going lower, you're going to see these measured moves. The measured moves tell you stop selling, right? And then look for that correction back up and then sell up here. So does channel rotation. Channel rotation also tells me sell the high of the channel. Don't be selling down here, right? Don't sell the low of that channel. Well, if you like the money. If you like money, don't sell the low, right? You'll get lucky sometimes, but you won't make too much money long term doing it that way. So S&P is clearly bearish. Remember, two things: channel rotation, measured moves. S&P is clearly bearish after a sell-off in today's session, which means sellers are already short this market. Do not fool yourself. Professional sellers were short from right about here. If you're trying to sell this market right now, you are getting sloppy seconds, right? You are about 3 hours too late to the start of the buffet, right, at Caesars in Vegas. You're getting in too late. Everything's been sitting on the burner a little bit too long. Wait for the good stuff. Wait for the good stuff. Don't try to sell this right now. Again, you can do whatever you want, but long term, you sell these lows like this, you're going to get smoked, right? Most often than not. So the sellers, the professional sellers, are already in short this market from early in the week. We want to wait for them to take their profit here and then look for another round of selling. Now think about it. If you got short all the way up here, right? That's where those sellers got short. You just know that there was a little bit of a range there. They tried once, they tried twice. This is where the sellers got in. The sellers jumped into this thing right here. So, what would attract me to keep selling? I'm not going to sell down here. This price looks horrible. What would attract me to sell again? I'm going to take some profit, and I'm going to have to get prices to go higher here for me to even consider putting my risk capital to work again. So we look at some correction zones overhead. Okay, this little range right here you see, that really is a tasty area for a correction. And really what you want, like we talked about on crude oil, measured move going higher. I can't tell you where that measured move is going to be yet. There's not enough stuff on this chart. And since we made that recent low back here, I don't think it's going to be just this little tiny guy. What will probably end up happening is we'll probably see it rotate lower and then make that measured move back up, and then we'll be ready to sell this thing middle of the morning tomorrow morning here on the S&P. Okay, but we do have some areas we're watching right now for correction zones, right? There's the minor correction zone, and then we've got the major correction zone. I don't think it's going to be that way tomorrow, just the way it feels right now, but that's about as high as it can go, right? We saw it today on crude oil intraday. We saw that big correction all the way back up, right? But as we said this morning, until they go back to the high of day, I am not even considering these bulls being in control. So we're going to dance our way higher here, and eventually the bargain hunters, the profit takers will subside, and we'll find ourselves looking for a great opportunity. Again, probably not going to be right out the gate tomorrow. Probably going to be middle of the morning tomorrow. Who knows? I don't know. You don't know. All I know is where the highest probability trades are going to be. That's all we can do as professional traders. So the best plan for tomorrow is to wait patiently for a measured move correction coming up off these lows, followed up with buyer failure. Guys, when you see a situation like this where this is just blindly bearish. And remember, there's also a spike in channel in here, right? I didn't mention that earlier. I got kind of wrapped up in what's really necessary right now, but that is a spike in channel. This is a spike down and a channel down. So that's the reason why we do have potential to see this thing go all the way back up and then come back down. So the best opportunity here is going to be to wait for that. Again, I can't tell you where the correction goes to, but be looking for the measured move correction. And then I'm not trying to sell with like a wave short. I'm looking for buyer failure. As price is going higher, look for buyers to try and buy the pullback and fail. As price is going lower, then we trade continuation patterns. So during this correction, we're looking for failures. And again, although I may not know where it is, I know what you should be looking for tomorrow is that correction up off these lows. If I had to guess right now, I would guess somewhere back around this minor correction. I really don't care about this 1900 area. I really don't care that much about 1900. But I do see this as being a little, short-term range. And if I put a volume profile on this right now, you'll notice it's all weighted down to the downside, right? With a little bit, right? There's a little bit of volume that piled up right here. And that's, again, what kind of lined up right around that 1900, right? So you definitely want to be keeping an eye on that minor correction zone. And, of course, if I can draw here right now, Joe, get your head out of your you-know-where. This area here. And literally, guys, we can go as high as that 1916. And those buyers are going to think that this thing's bullish. And the sellers, the patient sellers, will be waiting for them all the way up. Let's keep going. Now, this gold market, moving from the S&P 500 now to the gold, the yellow metal, the GC. Guys, we're still on the 12-15 contract. We're not going to be off this until the end of the year, pretty much, right? That's what happens when gold skips that 10-15 contract, right? We're here for a while. And as you can see, this is a tricky one. If you didn't know how to read price action, if you really didn't know how to read the candlesticks, you would blindly think we're bearish here right now. And we really are. We're bearish, but we're definitely seeing the mark of a trading range, right? We're definitely seeing the mark of a trading range. Like on the S&P, if I add a volume profile to it, you'll definitely see the volume is weighted to the downside right now. So there's no doubt about that, right? We're definitely bearish, and you can see this bearish spike in channel that kind of in typical gold fashion, right? This thing is just jittering all over the place here these days. Gold's a challenging market intraday right now. More longer term though, you get some of that noise out of the way, and it becomes a lot easier to trade when you go to a little bit slower time frame right now. So be careful on the day trading side, the real fast scalping time frames for gold right now. But guys, this spike in channel tells us that really the best opportunities are going to be the sell side right now. And really what it tells us is you've got two important locations. You've got the beginning of the channel and you have the beginning of the spike. Those are the two areas you want to be paying close attention to. Now, in addition to that spike in channel, you'll notice there's really no way of drawing a larger channel right now, right? You really don't get a good fit to it. So your natural tendency now is to look for a trading range. This is what gives it away. Here's what gives it away. If this was a real strong trending market, we would have not been able to stay above that moving average. And see the moving average flattening out here? That moving average is the big clue. That really is the big clue, if you ask my opinion. And then you add the 50% level to it, and it starts to make a lot of sense. This is just an untested range. At least that's what my gut tells me. So I'm expecting a rotation back up to the high of that range, which ultimately will be a failure of this spike in channel, right? It'll be a spike in channel failure. So Bottom line, gold is range bound with a bearish tone this evening after the spike in channels sent prices lower. We can see the correction off the lows after the spike down, right? So there has been that initial correction back off that low. And it definitely feels like these sellers have tried, but it doesn't feel like they've really got the juice right now. Now, I might be wrong about that. So I have to give the sellers the benefit of the doubt right now. I'd be foolish. Well, I'd be a rookie trader if I just guessed, right? It can't keep going down forever, right? No, wrong. It can keep going down. Well, put it this way. It won't keep going down forever, but it will keep going down much longer than I can float a stop. I'll put it that way, right? So the market can be irrational much longer than I can be solvent, right? As they always say, right? I can't keep putting my money to work here. If I was Goldman Sachs, I wanted to go lower, I'll just keep selling it lower, right? But I'm not Goldman Sachs. I'm a proprietary individual trader. So I've only got so much risk capital I'm willing to absorb. So I need to give these sellers the benefit of the doubt. That's where we look for the fake break of the low. What I really want to see is, well, and we'll keep reading here because that's what the rest of this text says. Okay, we can see the correction off the lows after the spike down, which means the sellers will need to prove their control at the range lows. We'll be looking for the sellers to try and fail at the lows of this range, right? So I'm expecting to see these sellers try to go lower once, twice, and that's when we're going to know we have that rotation. So the 2-try rule is in play right now. We go lower, I'm looking to fade that breakout. It's not going to be until I see them try once, try twice, and keep going. That's when I'll assume now this range was non-existent the whole time. It feels like a range, it looks like a range, but again, the bears are still too much in control right now until what? Until I see them try to go lower and fail. Then I'm looking to aggressively buy with that rotation back up to that high, which of course will also be a failure from that spike in channel. This is not an easy one right now, right? Every ounce of me says, just buy this sucker. But the problem is, we got to make the sellers prove to us first. They can't hold these buyers back. That's the key right now. That spike in channel is the most important thing. So look for the sellers to try twice to go lower and fail for that buying opportunity back up to this high. Okay, keep an eye on the 2-try rule. If you're a member of mine, you know exactly what I'm talking about. If they are successful going lower here, you know where they're going to. They're going down to this measured move. Okay, so look for those 2 tries. If they keep it going, then I'm going to jump in along with those bears. But not until I see that 2-try rule. I will be suspicious of these buyers or of these sellers at these lows. Now you know the plan for that funny yellow metal. And then how about that euro? Beautiful opportunities on the euro last week. This stuff has been a lot of fun. It's been a lot of fun. Now, I don't do this very often, but this is pretty much the only thing we have that's making sense for us right now. And that is I went back to last week's information. I don't like to use old data. I talked about this today in our trade room. Recency, use the most recent information. That's the most important information you see right now, okay? But we don't have that much from today. It was relatively low volume on the euro. Now, real quickly here, I need to zoom back out and show you that there is a bearish bias going into this trading range right now. There's a bearish bias going into this range. So while we are expecting rotation back higher, do not question this. This is a bearish market right now that is simply broken into a trading range, okay? Do not confuse it. There is a bearish bias for this range. So now you know why in big neon lights over here, you can see me screaming at you here. Don't forget, there is a bearish bias that tells us that we want to sell this high and bring it back down. That's where we're going to get the best opportunities going for the rest of the week here. But in the short term, though, the euro is range bound and it's rotating back to test the range highs this evening after those sellers undershot that low, right? So see how we have the range low marked up down here at 1130? Sellers tried to retest that low and they failed. Looks like we've got a little bit more pep in these buyers than we thought. Take that amount, project it above. Now we have our range rotation target as an overshoot, right? So undershoot at that low, overshoot at that high. You with me on this, right? Under overs, over unders, over overs. We teach all this stuff in our intermediate section of our website here at schooloftrade.com. So we see the sellers undershot the low. We also see we have a measured move now going back higher, and we also have a bull channel moving back higher. Now, remember what I said earlier when we were talking about the S&P. Channel rotation and measured moves. This is the wrong place to be buying. Yes, it might go higher, but I will not be in it. We know better than to buy at the high. We know better than to buy the high of a channel. What I'm looking for is a measured move correction. A, B, C, D, measured move correction, back down to that channel low. We might go as far as this 1182 to 1172 area. But the reality is, again, first of all, rotation back to the high, right? Range rotation tells me this price should keep going higher. Bull channel tells me this price should keep going higher. The bull channel combined with the measured move tells me, yeah, it's probably going to keep going higher, but I'm not going to be a buyer here. I want to wait for that measured move correction, channel rotation, back down, get some of these buyers out of the market, and give them another reason to get back on, right? Give them another opportunity to get back in. There are a lot of buyers that are already long this market right now. I need to entice them to take their profit at the measured move, and then I need to entice them to get back in after a measured move correction back off these highs. All right, guys? So focus on staying patient here on the euro right now. I'm looking for a correction, just something. Get me down off these highs right now so I can get a little bit more enticing area, right, to be a buyer as we go back towards these highs. Okay, on the gold market right now, remember, you really want to stay patient and look for those sellers to try once, try twice, and then rotate back higher. If they are successful, we're going down to that measured move for the mañana. And then, of course, on the S&P, everybody's bearish right now on the S&P. Now it's just a matter of enticing those bears after a minor correction or possibly all the way up to a major correction tomorrow. Be careful being a buyer right now in the S&P, as enticing as it really is. And crude oil, although we don't have a lot to work with here this week, we definitely know we're bearish. And remember, channel rotation, back towards those highs, range rotation, measured move correction as we go into tomorrow's session. Guys, that does it for me. Don't forget, grab your free pass, download today's charts, and if you got some free time, don't forget, guys, we have the best free trial in the business. I take a lot of pride in the fact I've worked very, very hard to make sure that you're going to learn more with me in my free trial than you will anywhere else on the interwebs. We also have a place for everyone, whether you're brand new as a beginner, you're just getting started, or you're a veteran trader that still hasn't been able to crack the code to unlock the wealth that comes along with successful day trading. Guys, I've always got someone standing by 24/7, 365 to give you guys a hand. And remember, being a successful trader is just like being successful in anything else in this life. It's like opening up a combination lock. It's not enough to have just the numbers. You got to have the combination of those numbers. If you're working hard to figure it out, come out and join us. I'll teach you the way professionals do this. And I'll let you piggyback on my almost 15 years of experience. Guys, my name is Joseph. Thank you so much for being here. Don't forget, send me some feedback. My email address is jj@schooloftrade. Also, share this information with a friend. Give me a thumbs up or a thumbs down, a comment below the video on our YouTube channel. And I'll see you guys tomorrow morning at 8 a.m. We open things back up. Or tomorrow afternoon, 8 p.m. Eastern Time. We'll do it all over again. Be well out there. Be nice to each other. I'm out of here. Adios, amigos. Bye-bye for now.